Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at our VS or volume spike setup with a great example that unfolded yesterday on the NQ. But as usual, let's start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades were actually taken, they're just shown for illustration and training purposes only. Remind you that there's a risk of loss in trading and investing. We'll be looking at a losing trade in the video as well. Or put another way, all professional traders know and understand, and more importantly accept, that losses can and will and do unfold. The trick is keeping those losses small, but there always will be losing trades. All trade decisions are your own sole responsibility. Today I'm going to use our NinjaTrader 8 add-ons. You can see here's our NinjaTrader 8 chart with our MTPredictor add-ons on the NinjaTrader 8 chart. This is a 3-minute chart of the NQ, and as you can see we have our automatic setups on the chart. The setup I want to look at is this VS setup here. So what's a VS setup? Well, a VS setup is, perhaps if I put some white space on the right hand side, right hand margin, I'll just increase that, make it a bit bigger and slide the chart across a bit. Let's zoom in a bit as well. There we go, we're zooming in a bit. A volume spike or VS setup is where the market makes a move beyond an important psychological level. You can see here this was Friday, the market opened and then came down, then rallied back up again, and here was a fairly important low, which was basically the low of the day so far in the morning on last Friday. So if I go forward one bar, can you see how here, this bar here, moved below this previous low? It also did it on high volume. You can see on our volume indicator we have a red bar here. This indicated there was a big move beyond an important prior level. Most amateur traders would look at this and say, oh, a move beyond a prior level on high volume, this indicates selling, therefore the market's going to carry on down. But we have an advantage at MTPredictor because we can put our DP or decision point support and resistance zones on the chart. If I go back a bit, and you can see how these would have been on the chart in advance. So I'll right mouse click on the pivot low, and you can see there it is on the chart in advance. So it's giving you an area of potential support. Now what happens if the market goes into this level and then the very next bar, if I move forward, the very next bar, it basically fails to follow through and makes a reversal? This is the important point, is that if you have a high volume break, as we did on the previous bar, this bar, then the next bar, it then fails to follow through. It means that the high volume, which we can see here on the volume indicator here, the high volume was not selling, as most amateurs would think in this case, is actually buying. It's professionals looking to come into the market and then probably move it strongly in the opposite direction. In other words, it's a fake out. A classic fake out where the professionals move the market just beyond a prior level and then snap it back and then catch all the amateur traders in the wrong direction and then move it quickly in the opposite direction. So that's what our VS setup is designed to capture. And what we can do now is, if we right mouse click over the blue bar, do analysis, you can see not only are we looking to have just a reversal at this level, but we also have a projected target. This is important because then it allows us then to put our risk reward analysis on our trade and then see how good the trade is. This is why it's so important, is that it's not just to catch a profitable trade, it's to catch a profitable trade where the profit is large in relation to the initial risk. In other words, profits are great, but they have to be related back to the initial risks, so they're large in relation to losses. Because if you remember at the start of the video, I said losses can and will and do unfold. We'll have a look at a losing trade in a while, but the trick is keeping those losses small, but not just small in dollar terms, but small in relation to your profits. So this gives you a total setup, so not just knowing that the market's likely to reverse at this level, but to give you a target of where the market's likely to go to, and then how that profit, if the market gets there, relates to the initial risk. Oh, actually, let's go back and just change it to our default account. So that's risking 2% on a sample $20,000 account. Right, let's move forward. And we can see what happens. The market does indeed move up quite nicely, keeps on moving up, moves down a bit, retraces back. There was another sell set up there, but it was against our blue MTP trend. and then suddenly reaches our target. Oops, didn't mean to do that. Our target there, where a profit of approximately 2.3 R, or a profit of 2.3 times the initial risk, was available. So as you can see, a nice trade as the market moves higher there. But the whole idea of the setup is to catch a fake out where amateurs are looked to be caught on the wrong direction by looking for a high volume move beyond a prior pivot. Let's just clear everything off, and just wanted to show you what happened a bit later in the day. I want to just reset that right hand margin so it gives us a little bit more space. There we go. Let's have a look at the rest of the day. And oops, just want to go there. You can see that the MTP trend was blue, and the market trend was indeed up for the rest of the day. Now here I want to show you a losing trade, because I promised this at the beginning of the webinar. Losses are important. Can you see here we had a history triangle, this little triangle here. What this means is at the time when this blue buy bar came in, if I do the analysis over it, there was a potential trade set up there. You can see that the market went beyond the entry level, came back down, and then would have stopped you out. So this would have been a losing trade. So the loss would have been a -1R, or 1 risk unit. This is why it's important to count your potential profits in relation to your losses, because this profit back here would have been plus 2.3R, or 2.3 risk units, whereas this loss here would have only been 1R, or 1 risk unit. So the loss was kept small in relation to the profits. The market then kept going down a bit, so that would have been a losing trade. Made a TS3 buy setup here. Again, let's right mouse click over the blue buy bar, do our analysis, and you can see actually the market went up to its first target where a nice 2.1R profit was available. There was another trade a bit later in the day, but I don't know whether you'd have taken that or not, because it was quite late on. If you had have done, the market basically drifted sideways, and you'd have come out at basically about break even, so not much happened on that. But that's the volume spike that I wanted to look at today, where the market moves beyond a prior important psychological level. It then reverses, but not anywhere, but it reverses at our decision point level. Remember, this would have been on your chart in advance. We then can do a trade setup in and around that, where we look for a potential target. We have this on the chart in advance again, but more importantly, where the profit would be large in relation to the initial risk. If I zoom out, you can see, whoops, get all the chart on there. You can see that VS setup actually caught the very bar of the low of the day on Friday. So a very nice trade setup. We also had a look at a losing trade, then another profitable trade a bit later in the day. So that's our MTPredictor add-ons for NinjaTrader 8, and in particular our volume spike, or VS setup, which as you can see caught a very nice trade for you on the 3-minute NQ on Friday.